Hello. Great. Welcome, everyone. Thank you for joining us at the Berkman Klein Center for Internet and Society. My name is Isabella Roden. I'm the Director of Communications here at BKC. Please take a moment to silence your cell phones. This is a hybrid meeting. We will be recording. Some quick other housekeeping things. Bathrooms are down the hall to the left. We have trash and recycling here. In about 40 minutes, we will open up for Q&A, so please wait until a staff member hands you a microphone to ask your questions. And now we can all, I think the webinar has already started, but we have begun recording. So thank you all for joining us at the Berkman Klein Center for Internet and Society for Move Fast, Break Things, the policy origins of today's AI race, with Nur Laiq in conversation with Marc Aidinoff. The Berkman Klein Center for Internet and Society exists to make sense of the digital environment and ensure that it promotes human agency, dignity, and genuine connection. With that in mind, what happens when policymaking becomes a race to move the fastest? Today's U.S. China AI race may seem like a new dynamic, but the United States has seen a version of this before when the U.S.'s own states competed against one another to become the next Silicon Valley. Nur and Marc will be discussing how this model continues to shape how emerging technologies are governed today. So I'd love to introduce our speakers. Dr. Nur Laiq is an Emerging Technology and Geopolitics Fellow and an Ernest May Fellow in History and Policy at the Harvard Kennedy School. She is writing a book on the politics of the contemporary tech age that treats policy not as background noise, but as the real engine of the tech economy. Laiq is also a non-resident fellow at the Center on International Cooperation and the International Peace Institute, where she advises on AI governance policymaking. Marc Aidinoff, who will be coming up a little bit later during the Q&A section, is a historian of science, technology, and the state, as well as a public policymaker. An assistant professor in the Department of History of Science at Harvard University, Aidinoff researches the interplay between digital technologies and domestic policy in the United States. So finally, before I turn things over to Nur, I'd like to introduce you to some technology that we will be using today. NextSpace is a BKC-built AI tool designed for in-person and online audiences to make it easier to stay engaged, surface questions, and make the most of our events. You'll see a URL up here, but there are also some URLs taped to the walls that are not URLs, but QR codes for you to access it. It can help you catch up if you get distracted or miss something. You can ask things like, what organization did they just mention? Or I zoned out. What did I miss from the past 2 minutes? You can also ask Berkey, the bot, questions in the group chat by tagging it as @Berkey. And at the end of the event, like I mentioned, we'll be conducting in-person questions with the microphone, but also we'll be getting questions from NextSpace. So to queue a question for the speakers in NextSpace, message Berkey through his direct message tab and use /mod at the beginning of your question. We'll be alternating those questions. So go to brk.mn/Berkey to try it out. And a quick transparency note, it runs on Claude Opus 4.6 through the Harvard API proxy, and a pseudonymized message log is visible to our team. So with that, I'll turn it over to Nur.
Okay, I'm delighted to be here, and thank you. So I'm going to go old school and just give a talk, no PowerPoints and no tech involved, and I'm just going to dive straight in. So today's U.S. China AI race is often framed as the defining technological competition of our era. It's been marked by a surge of subsidies, tax credits, and public-private investment as government commits billions to AI, to data centers, and semiconductor infrastructure in pursuit of technological advantage. We see tech CEOs as political power brokers and a president who's stripping regulators of their power over the tech industry. We often treat this as something new, something Trumpian, as if the intimate entanglement between tech and the state only really began with the arrival of Trump, the billionaires, and AI. However, if we take a closer look at tech policy, we see that the U.S. China AI race, as well as the relationship between Trump and the tech pros, is not a rupture, but a culmination of the intertwined relationship between tech and politics since the 1970s, when tech goes civilian and commercial, and therefore political in an entirely new way. My talk goes back to the 1980s, the early 1980s. The US was in recession, but Silicon Valley had taken off. As one newspaper commented at the time, it seems as if every locale in America wants to turn itself into Silicon Ridge, a microchip Oaks, or a random access memory manor. Another reported, the nation is obsessed with anything having the label high tech and sees it as something magical. Cities and states compete to attract such businesses. Politicians vote for tax rebates, subsidized bonds, and industrial parks to entice them to their home districts and states. And thus began the interstate tech race, the first tech race rather than today's one, which is a follow-on from that. My core argument is that in the 1980s, we see states pin their hopes on the power of tech to deliver growth and development. They all wanted to win this tech race within the US. In doing so, state governments courted the tech industry, and what looks today like a hyper-modern AI arms race is built on this earlier architecture of state-level forcing and capture. In my talk, I'll suggest that in the 1980s, governors were crucial in building this age of tech and an economy in which high technology, venture capital, and a techno-optimist-driven public policy became the structural forces that we are now encountering again today. In chasing the promise of Silicon Valley, these state actors, mostly Democrats, who ran most state governments in the early 80s, and at the time who needed tech as a panacea for deindustrialization, pioneered new tools, state venture funds, pension fund investments, and deregulation that they hoped would advance the traditional liberal goals of jobs, education, and development. But in the process, they created a political economy in which tech firms increasingly dictated the terms. So my talk's going to proceed in 4 steps. First, I'll explain why tech became a race that needed to be won, and I'll do this by sketching out the early 1980s economic crisis and how tech actually came to be seen as a silver bullet. Second, I'll introduce California and its tech model that began being used as a recipe for success. And third, I'll show how governors across the country used public funds and deregulation to chase Silicon Valleys of their own. And finally, I'll discuss the questions this raised and come full circle back to today's AI race with China. So, to go back to the early 1980s, in 1981, Ronald Reagan's glitzy inauguration balls with guests in mink coats and diamonds reinforced the president's campaign message that he would take the US out of Carter's austerity years and make America great again. And yes, that was his phrase originally. But in the early 1980s, the golden hues of Reagan's oratory were far removed from the pallid grey economic reality. The bleakness of the 1970s had slipped right into the 1980s. The first years of Reagan's presidency were marked by recession, by factory closures, and by soaring unemployment. In 1982, the unemployment rate sat at nearly 11% of the labor force, the highest that it had been since 1941. Between 1981 and 85, 2 million jobs were lost in old line manufacturing, and the number of failed businesses rose to the highest level since 1932. The immediate fallout was not actually felt by Reagan, but it was felt most acutely on the ground at the state level. State governments struggled with budget deficits, with deindustrialization and economic stagnation. Into the first years of his presidency, as economic hardships continued, the Reagan administration continued to insist that its supply-side program of tax cuts would stimulate growth and lead to economic rejuvenation. Reagan's vision centered on lowering taxes, reducing regulation, and cutting government spending, and he stuck to his campaign pledge, much like this president, to curtail government, and he declared the government is not the solution to our problem, government is the problem. Now, what this meant in terms of the tax breaks as well as government being seen as a problem is that Reagan's federal retrenchment meant that the state governments were left on their own and had to figure things out on their own. And there's a famous headline actually from that period where
which were in the 1970s, where already the states had felt they'd been left alone, where the New York Daily News has this headline where Ford to the states dropped dead, to making clear that there was no money coming their way. The combined impact of the recession as well as tax cuts led to a surge of activity among state governments. One political commentator at the time described the emergence of state efforts in the 1980s to provide new sources of capital, to promote new technology, and to support entrepreneurship. Another observed that while the Reagan administration was denouncing government intervention in the marketplace, governors were embracing an unprecedented role as economic activists. Enter Silicon Valley onto this stage. During this time, the tech industry had witnessed great economic growth. So whilst the rest of the country was in recession, what we saw was computer sales had surged to almost 5 billion units, and that in 1981 was already double the number of the year before because the desktop computer had just arrived at the end of the 1970s. By 1982, Time had named computer the man of the year. And as Time magazine observed, the information revolution that futurists have long predicted has arrived, bringing with it the promise of dramatic changes in the way people live and work. It concluded that America will never be the same again. By the end of 1983, as manufacturing jobs continued to ebb, more than half of Americans were already engaged as knowledge workers. Silicon Valley stock was soaring, literally in terms of the billion-dollar IPOs of tech companies like Apple, and also in terms of the jobs and growth taking place. However, it's important to remember at this point, the tech industry was still the exception, not the rule in the early 80s, because the much heralded Reagan boom really only arrived in the mid-80s. During this period, Silicon Valley became a symbol of hope, and this was based almost entirely on the success of California. As state governments looked to innovate, California offered an example of success, especially in the context of economic growth and development, and governors seeking solutions had glimpsed the transformative power of high tech in California, just as many of them were grappling with how to renew their own state economies. So California's gold rush, read computer rush here, was delivering jobs even in the recession years and was already well on its way to acquiring the tinctures of legend. With mills and factories, the state jewels of old having lost their luster, states were now prospecting for new gold. By the late 80s, we also had the Massachusetts miracle, driven by Governor Dukakis, and this added another sprinkling of gold dust to the tech industry. But in the early 80s, many were looking to the California model, which was widely being promoted by its governor, Jerry Brown. So in 1983, Jerry Brown had already come to the close of his first governorship, and he launched the National Commission on Industrial Innovation. Brown used the commission to promote a national industrial policy for tech. And that's the first time we have industrial policy, which has always got a bad name in America and something we don't talk about, but actually it's been around since the 80s, and this is where it starts at the state level. There was a huge demand for his California tech playbook, as states all sought to create their own Silicon Valleys. And Brown, actually, who'd gone to sort of study for the priesthood, was now very evangelical in his promotion of a state-led tech policy. The National Commission set up by Brown developed an agenda, and it included some of the most prominent figures in Silicon Valley at the time. So William Norris of the Control Data Corporation, Robert Noyce of Intel Computers, Apple's marketing pundit, Regis McKenna, Steve Jobs, venture capitalist Tom Perkins, and senior execs from the National Semiconductor Association, IBM, and then as well as venture capitalists and investment bankers like Roger Altman of Lehman Brothers, who had been Secretary of the Treasury under Carter and would go on to become Deputy Secretary under Clinton. Much of the Commission's $250,000 operating budget actually came from tech firms and was thought to give a breath of life to this commission. The treasurer was the vice president of the National Semiconductor Corporation and commented that this is a cause that high tech can really rally around. Now, of course, this was a golden opportunity for the tech industry because for a relatively small sum, Silicon Valley had bought itself a new political vehicle through which it could seek to influence policy. This was crucial because the industry was doing well, but at the same time, it wasn't what it is today at all. It still needed access to capital, and it still needed government support. And actually, we see that through line till today, but at that point, it seemed even more urgent. The industry strategy centered on enticing states to offer tax breaks and capital funds in return for the promise of economic growth and development, California style. Now, Reagan had praised tech entrepreneurs, and of course, he'd cut taxes, but his laissez-faire position meant that he was not going to dish out any sector-specific support, especially for the tech industry. So Silicon Valley CEOs, on the other hand, wanted targeted investments just for them and tax credits, but this was not coming, and of course, the magic of the market had not yet arrived. So in the early part of this decade, the Californian success story was not Reaganite, it was Siliconite. Now, what's interesting is that much of the scholarship today still focuses on the financialization of life in the US, driven by Wall Street during this era. But I suggest that what we see is not just a financialization, but a techization of American life by the venture capital firms and the tech industry of Silicon Valley. We see how in the 1980s, tech actually begins to emerge as a structural force. And actually, this is the beginning not just of the age of Reagan, but of our contemporary age of tech. The fascinating part of the story is that at first glance, it looked like the states were chasing tech. But my research in the archives of the tech industries also shows that, in fact, the tech industry was chasing the states. And in this hunt, the states didn't even realize that they were the quarry because they thought they were the huntsman. The Silicon Valley CEOs on Brown's task force had set their sights on obtaining tax and regulatory concessions, which they marketed as essential for economic growth. Their policies aimed big. Their discussions, which I found through archival work, revealed Silicon Valley's goals and how they took advantage of states, most of which were run by Democrat governors at the time, desperate for investment and for jobs. Many states would end up granting tech companies most of the items on their wish lists, as drawn up by this task force. The states, of course, believed that the provision of capital was a way to provide dollars to promising new businesses and to create thousands of new jobs. The task force had its own agenda, and it had a very sharp and concise business-like tone in terms of how it dictated its positions. So point number one that it proposed was that the Glass-Steagall Act should be reformed to permit equity investments by banks. And of course, we see this happen under Clinton, and we know what happened with that. Further goals were stated, such as the double taxation of dividends needed to be eliminated by taxes on individuals, taxes needed to be lowered on stock options, and other measures needed to be taken to reduce the effective tax rate for expanding industries, i.e. for the tech industry. The supply of capital, they demanded, should be increased by allowing pension funds to invest up to 10% of their funds in company or industry of the donors. So this is, again, very tech specific, and we see it come full circle back to this recent election with Biden and Trump, where actually one of the reasons we saw the VC shift from Biden to Trump was because Trump agreed to open up pension funds for crypto investment. So again, this first begins in the 1980s, where they opened up for tech investment. And of course, pension funds in the US are the biggest pools of capital around. They're worth tens and tens of billions of dollars. R&D tax credit, they demanded, should be expanded to include startups, and also by eliminating their incremental nature and including limited partnerships in this. A lot of this had already been done in California under Brown. So under his government, he'd actually been one of the first to open up pension funds, an investment unit which was responsible for pushing forward an amendment that would soften the restrictions on pension fund investments. And Brown actually persuaded the state's public pension fund to invest some of their $30 billion, and this is back in the 80s, of assets into providing loans, including for the tech sector. This meant that there was seed capital for tech startups. And in addition to this, Brown also established a Corporation for Innovation Development, which was later copied by Massachusetts with its Tech Development Corporation. He also partially deregulated securities, making it less costly and less time-consuming for Californian firms to issue stock, and repealed the state capital gains tax on productive investments in small California companies, i.e. tech companies. And of course, here again, this was a huge issue in the 2019 election year, where part of the reason the techies and the VCs shifted from Biden to Trump was, again, the capital gains tax issue. And this has come up repeatedly in every election where Silicon Valley is pushed on this as a bargaining chip. So by the 80s, California was not just home to burgeoning tech firms, but it was also home to a political model, one that combined liberal aims, tech for growth and economic development, with jobs, but also with a set of increasingly financialized and techized tools. So these pension fund investments, the deregulation of securities, and targeted tax breaks for Silicon Valley. It's a model that the companies wanted other states to adopt. And this is where we come back to the commission and to the platform given to the tech companies. So William Norris of the Data Control Corporation went around on a speaking tour where he advocated on this fundamental issue of capital for the tech industry. Giving a keynote speech at the 1984 Commission's Conference on State Initiatives to Promote Industrial Innovation, sensible ideas for encouraging future industries, given in Washington, an event that was co-sponsored not just by the Commission, Brown's Commission, but by the National Governors Association, the National Conference on State Legislatures, and the Democratic State Assemblies of New York and California, and by the Democratic-run states of North Carolina, Minnesota, Massachusetts, as well as the Rust Belt Republican state of Illinois. And now you can already see there's a trend here that a lot of these states you'll never hear again in the context of tech, because hardly any of them managed to capture or to win this race in terms of tech. So Norris at the time seized the opportunity to press state politicians to set up capital funds and to pass pro-tech legislation. He cited the example of Democratic-governed Minnesota, which established the Minnesota Seed Capital Fund, and praised the act because it provided a 50% tax credit for contributing to small companies, i.e. tech, as well as a tax credit of 30% of the value of technology transferred by large companies to small businesses. State governments had the ability to deliver major financial incentives, which led the tech companies keen to chase them down. Now, the tech companies, of course, wanted to cut to the chase and to get to their quarry, the states. Silicon Valley had clearly staked its ground. The states were the big game. The Silicon chase had started out as one where the states had run after tech in the hope of investment. But now what we saw really clearly was that the Silicon Valley was chasing the states in search of capital for itself. Tech had located a new source of risk financing. This was state governments. As will become clear, it's not that the states had suddenly become flush with spare money, but that they'd actually found sources of capital that they were willing to open up for investment. By 1984, nearly half of all American state governments had invested nearly $400 million in tech. Some had created their own state-run venture capital corporations. Others had established state tax incentives to attract dollars for profit venture funds. And another increasingly popular approach was also following the California model of opening up their state pension funds for venture investments. Many Democrats, such as Michigan's governor's cabinet, viewed the thrust towards liberalization as a means to generate jobs. For them, it was a form of investment that had a much more direct payoff in terms of economic development than was being created in Michigan at the time, or than they could create through the purchasing of stock on the New York Stock Exchange, for example. So Michigan at the time invested $26 million of its pension fund in companies that were looking to help modernize through tech. Democratic-run New York, which has one of the country's biggest pension funds, was also invested $24 million in tech enterprises. And the Democratic-led states of Alaska and Wyoming, which you might have heard of or not in terms of their the tech industry, set up state venture funds of $42 million and $30 million respectively. More common amounts across the board were $1 to $10 million state pools, where some smaller funds of smaller states, such as Little Maine, invested only a few $100,000, but all of them were keen to get into this race on tech. Massachusetts went in early and went in big, and invested in risk capital for high-tech companies. And then copying that model, Louisiana, New York, and Utah followed suit. It's interesting to note that how the appeal of tech and the magical thinking around it in these democratic states meant that they found ways to invest in industry, which included removing decades-old regulatory frameworks at the time. Because of course they were all in this race with one another to try and attract as many tech companies as they could. It demonstrates how deregulation in this context was being undertaken for what the states thought would actually be an investment in the public good. The provision of jobs continued to be a key motivating force for Democrats and their state-led capital schemes, just as it was with their education programs and retraining programs. The goals remained traditionally liberal ones, but the means were getting increasingly more dicey in terms of the risks that the states were willing to take through deregulation and through the investment of these public funds in the market, and specifically in the tech market. At the same time, these measures enable Democrats to assure voters of a better tech-based future and showcase their commitment to that new future. So again, we see that same sense of how many sort of aspirations, not just of politicians, but also of parents and kids, etc., being sort of fueled by this tech dream that had started to emerge. Brown's California model, along with the National Commission and the Conference on State Initiatives, had been a huge influence and hugely successful influence. So after this conference, Brown then set up affiliates of this commission in 10 states across the country as a way of discussing and testing at the state level these kind of policies in order to then get them considered at the federal level. The states had become the laboratories of tech by this point. Now, even as the states were rushing to invest their newly opened up pools of capital, there were actually warning signs already in the early 1980s. One such warning was issued at this National State Initiatives Conference itself by its co-chair, Roger Moe, who was the Democratic Senate Majority Leader in Minnesota, which, as you recall, had already invested a lot of money in tech. He offered an alternative point of view to that of Brown on the new economy based on the experience of his home state. Moe described Minnesota as having over-feasted on the banquet of tech and of venture capital deals. He described how, hoping for economic expansion, the state had passed more economic development programs in the last 2 years than in the 12 years preceding. But by 1984, the reality was beginning to hit. Speaking at a panel on how states can encourage new business formations through tax breaks or what, Moe offered the conference a candid analysis of lessons learned. He spoke of Minnesota's experience in providing financial and regulatory sweeteners and its dashed hopes of stimulating business and job growth through tech. Moe counseled that the state should not promise too much nor waste scarce resources trying to achieve the impossible, especially when competition for business tax breaks have eroded tax bases. He acknowledged the pressure to cut taxes and for spending to be competitive, but he also stressed the negative impact that such decisions had on the ability of the state to make longer-term investments in other things such as education and infrastructure that also underpin economic development. So again, we see a familiar story here where there's a sort of lack of investment in education, as we see today, and all other forms of investment in economic growth and development are being ignored as we pursue this AI race and investing directly in the tech companies and the infrastructure they require. So Moe at the time argued that it was hasty or short-sighted budget cuts to gain a short-term advantage only erode our ability to compete with other states over time, and also with foreign competition. The main foreign competition at the time being Japan, and again, there's a connection between the race with Japan and the sense of Japan as the yellow peril, as we see with China today. Moe concluded, we give tax breaks, he said, to industry and admit it, but we make up those losses through sales and local property taxes. Yet, there's no empirical proof that tax breaks to industry are truly controlling and obtaining new industries. So they weren't even sure that they were being able to keep these industries, even though they'd shelled out all this money. Moe posed a challenge to the audience. What about the poor, he asked, returning to the issue of tax breaks and their wider implications for society. he submitted, in the scramble for jobs and economic advantage, do we risk losing sight of another important purpose of government, the care and concern for the poor and those unable to care for themselves? The fact of the matter, he declared, was that most of the states with good business climates have very regressive tax regimes. He questioned, should national or state policies somehow guarantee that favorable business climates aren't supported on the backs of the poor and the powerless? Otherwise, the pressure to compete may force us all to level down to the lowest common denominator in public policy, abandoning commitments we all know should be met. Such a forthright evaluation of the political and economic environment was rare. It was mostly brushed aside by other politicians. The problem for Democrats such as Roger Moore was that the American faith in government had declined sharply while the nation was well into this new era of tax cuts. There were neither the tax revenues nor the underlying faith in the state to sustain any New Deal-style responses. At the same time, investing in tech offered state governments a path forward on economic development, or so they thought. The State Initiatives Conference heard from other skeptics on the same panel as Moe. One was an investor from Ohio. He was the vice president of Ameritrust, a grand old bank of the Midwest. He shared the Cleveland experience where the loss of high-paying manufacturing jobs is double deadly. Not only are the jobs gone, but the new jobs in the so-called high-tech industry, he said, tend to be low-paying service and assembly jobs. So again, seeing a pattern that first begins in the 1980s but continues through till today in terms of what some of the types of jobs that are being created. Next up came the Assistant Secretary of Commerce of North Carolina, who also announced his misgivings on tech. But at the same time, the South Carolina representative who was there, Francis Archibald, recorded that although the North Carolina guy opposes practically all tax concessions to new industry and says that states can't pick winners up front, especially, and then was worried about what happens if states back a few losers. But the overall mood of the conference, Francis reported, was that politicians actually did not want to hear from techno-pessimists. It was becoming evident that tech was seen as a panacea and that politicians were continuing to pin their hopes on it as a solution, even as these issues were rising up in terms of its actual impact on growth and development. And it's worth noting that many states had in fact replaced smokestack chasing with the silicon chase at this point. Now, during previous decades, states had also, when they were participating in smokestack chasing, what that meant is that they were chasing after the old thoroughbred companies of the steel and auto industries. The Stanford Research Institute, a pro-tech institute, shared with the National Commission its lessons learned from past experiences on technological change and drew attention to the futility of this new smokestack chasing, where states were competing to attract tech companies. SRI reported the use of tax incentives to lure industries into state often turns out to be a zero-sum game, in which regional competition and beggar thy neighbor policies prove counterproductive to all states involved. But this is precisely what the states were doing in the 1980s in their silicon chase. At the same time, the growth of the tech industry combined with the techno-optimism of the period meant that politicians continued to gear public policy towards this end. The SRI also warned of the quick fix, an exclusive focus by the public and private sector on a single policy tool or a single industry. And here it gave the example of, e.g., high tech will save us, usually leads to unrealistic expectations, i.e., the number of jobs that can be produced don't actually come through. Now, most US states did not succeed in establishing their own Silicon Ridge or microchip oaks, and as you probably heard, for most of the states that I mentioned, hardly any of them would you hear from again in terms of tech. Some states did thrive, but they tended to already have robust financial education and educational ecosystems, which also played a key role in their success. So Massachusetts is a great example of this in terms of its heft when it comes to old money and education. New York, of course, had Wall Street, and North Carolina had the University Research Triangle. But ultimately, Silicon Valley and California remained the center of gravity for the tech industry. Resources were finite, and the championing of tech-related policies came both at a financial and a policy planning cost. The states themselves had to pay a price for their taxation and deregulation policies because these resulted in the sacrifice of other social and financial objectives. So the socioeconomic distress they sought to alleviate often just became worse. Dollars poured into venture capital and tech left behind fewer cents for public services. The embrace of tech almost elevated tech into a public good itself, bringing corporate welfare into the same sphere as social welfare. Ethical lines were blurred and questions rarely raised. Except here again, we have the Minnesota politician Roger Moore pop up, but he was a rare exception in bringing up the issue of ethics and responsibility around tech investment, where he asked, is welfare capitalism now acceptable public policy? In the early 1980s, the answer seemed to be yes. State-level Democrats drove tech policy in what is now widely perceived as the age of Reaganite hegemony over the state and the market. But it's interesting to note how at this point that there was so much action at the state level, and that's actually Democratic politicians who had agency as they courted high tech, viewing it as the tool that they did. However, it's they who ended up being captured by tech as power increasingly became ensconced in the private side of this public-private relationship. Silicon Valley began to dictate the terms of the relationship with regard to tax and regulatory policies increasingly. Many Democrats were too dazzled by tech solutionism and wanting to be part of the winning team to even realize that a contestation had actually taken place. It also demonstrates the important role played by government in economic growth and development, which again brings us back to where we are today in terms of how important a role the government is playing in terms of the current race. At the same time, it also shows how democratic aspirations for a better equation between capital and labor and for an equal public-private partnership between government and the market were dismantled in their eagerness to win over Silicon Valley. So in conclusion, I'd like to talk about how in the early 1980s, we saw governors operating under fiscal stress and declining faith in government, and how they used high tech as a development strategy. They innovated, of course, because it's they who created state venture capital vehicles, took new risks with these public funds, and pushed deregulation specifically tailored for the high-tech industry. In doing so, they helped transform tech into a structural force in the American economy and also blurred the lines between public welfare and tech welfare. Seen in this way, the 1980s are, of course, not just the age of Reagan, but what I call the beginning of our current age of tech. The state did not wither away under Reagan, but in fact, it was repurposed as an engine of financialized, tech-driven capitalism. The result was a public-private partnership in which the private side, Silicon Valley and venture capital, increasingly set the terms of policy, even as politicians justified these choices in the languages of jobs, innovation, and growth. This longer history helps explain the world we see today. The fact that today a president can threaten regulators on behalf of tech, or that AI policy can be shaped in tandem with a handful of dominant tech firms, rests entirely on this earlier history of state-level courting and capture. What looks like Trumpian rupture is really a culmination of and it's the latest phase of a 40-year story in which governments within the US have been competing to attract, to subsidize, and to deregulate in favor of high tech, all in the name of prosperity and in the name of winning a domestic tech race. Now, today we see the US government repeating these same patterns with bipartisan consensus, mostly, in the name of America securing its economic and military supremacy and winning the AI race with China. If the last 40 years show us how easily the pursuit of jobs and growth can slide into a welfare capitalism for tech, what would it take today to imagine a different relationship between government, innovation, and democratic accountability in the future? And this is where the states come back in, because in the last year, we've actually seen a huge renewal of state action, with 48 states passing 345 pieces of legislation around tech just in 2025 alone. And that was a 50% jump from 2024, which was almost a 100% jump from pre-2024. So you can see the amount of activism there. However, most of these laws relate to data privacy issues in the blue states, to child online safety issues, and to increasing crypto access in the red states. New York has tackled the issue of AI safety, and it's passed an act on AI transparency and safety standards for large-scale frontier AI model developers. But that's where the action seems to be. There's been a lot of news coverage recently on states against data centers, but there's a long history of states granting and extending tax cuts to data centers, and the states are expected to continue these policies. So actually, there's been much more investment than activism against, even though that's what's covered in the news. Now, some states are actually beginning to engage with the political economy of tech in a manner that isn't just about winning, but it's also thinking through the impact of tech and AI on issues from energy costs to workforce development to tax revenues. Now, will they actually follow through, or will we continue to provide welfare capitalism for the tech industry? This is the question that this earlier Silicon chase and our contemporary AI race leaves us with. And now I look forward to continuing the discussion with Marc.
Thank you so much. It is just a pleasure to have a colleague who thinks about state policy as the place where AI and tech policy really happens. So I kind of want to start there. And I was, listening to your talk, I was struck how from the state level, most of the policies you describe are functionally a failure.
Yes.
That this doesn't bring tech to Wyoming in this way that's going to rejuvenate. But nationally, to play devil's advocate, isn't this a story of success from the purpose of a federal policymaker's point of view? That America's tech ecosystem is only great because of this, the laboratory of democracy framework happening, so that they're trying out all these ways of bringing in a tremendous amount of capital to grow a leading industry, to make the US, a hub of tech innovation.
Yeah, absolutely. So I think if you look at it through the lens of economic growth, then yes. And that's the same answer we get today with the U.S. China race, that yes, of course, these billions of dollars pouring in will lead to economic growth. And we've got a stock market in a bubble that is proof of that for the time being. But if you look at it through the lens of development and what it actually means in terms of lifting up some of the sort of economies of these states, that doesn't happen. And already by the mid-1980s, we see these problems being raised by the states. By the mid-1990s, the Clinton administration comes up with the idea of a digital divide, because already in 1995, you can see how tech is just not delivering when it comes to economic development within the states. So there's a kind of dichotomy there between growth and development, and what it actually means for sort of growth in terms of the stock market, and what it means in terms of development and how it hits people's lived realities.
Thank you. So I'm going to open it up in just a minute for questions, but I have so many that I'm going to just keep the mic that's attached to me and ask you a whole bunch of questions at the start.
Yeah.
I would love to just get a sense of, I love the focus on policy. And so two questions sort of focusing on policy as this engine. How do you think about the difference between all these policy tools, and which are the really impactful ones and which are the ones that turn out to be show? So there were tax breaks, there was capital gains, there was, you went through such a long list.
Yeah.
With a little historical space, how do you evaluate which ones really matter?
Yes, I hope people didn't get too bored with the whole litany of tax breaks and subsidies that the tech industry got, but I think it's important to name them. I think that, of course, those were important in certain states because they did allow VCs in the tech industry to access capital that they needed. But at the same time, in a lot of those states I mentioned, I mean, literally all of them, with the exception of, California, Massachusetts, and the North Carolina University Triangle, none of those, Alaska, Wyoming, etc., did we hear of again, ever. And so all of that money that was poured in, or those tax breaks were given, didn't actually lead to anything. So there was a policy failure there. And I think in terms of connecting back to today's policy debates, if there is indeed a debate around the U.S. China race and the money being pumped in, is that we have to think of policy not just in terms of investment for economic growth and tech growth, but also policies for mitigating the kind of fallout from the tech industry that we get. And this is what was not happening in the 1980s or in the 1990s, even though, of course, it comes up as an issue, as some of those politicians mentioned. And it's not something that we're really dealing with today either all that much.
And do you see some sort of moments where this is working? So I'm thinking of like WorldCom going into Mississippi, or Micron factories in Boise, where you do see pockets of tech outside of Silicon Valley.
Yes, I mean, well, yes, so you do have that. There's also Colorado, which has its moment. So they are, and of course now we've got Texas. So they are examples, but I mean, I don't know if that kind of, they clearly haven't been easy to replicate, not just in terms of American states, but also I actually came to this topic because I meet a lot of finance ministers, and they'd all have the same question of how do you replicate the success of Silicon Valley? And as we can see, it's not been an easy one to replicate, because it's not just about policy decisions around deregulation and investment, and which again brings us back to this question today, that actually can the US, as it's doing all of this at the federal level, can it win the race with China? Or is China, I mean, there's some people who say China has already won the race. So that's a whole other question that opens up.
Well, so before we get into the U.S.-China race, such as it is, like, what's your actual answer to the question of how to create another Silicon Valley? The answer is not welfare capitalism. Do you look towards culture? Do you look towards infrastructure? If you're trying to build out a robust ecosystem of employment?
I think my one hyphenated word answer to that is military-industrial complex. I think the only two countries that have been hugely successful in actually creating the original Silicon Valley and then recreating one in China is the two countries that have just that immense power. And by military-industrial complex, I do not just mean the military side of it. I mean that a government that actually can invest billions of dollars and not only be a guaranteed investor, but also be a guaranteed customer. And this is something that we've seen recently. I mean, we see it with SpaceX. We also see it with Amazon and cloud services. Just recently, Amazon gave $1 billion voucher to this government for cloud services. But you can just imagine, if you're giving away $1 billion for free, the kind of return you're expecting on that in terms of guaranteed customer. And so cloud services, for example, the US government has $100 billion that it's going to spend on that. So those are the kind of stakes we have today.
Can you say more about how the military-industrial complex side lays onto state policymakers' thinking? How the politics of those two worlds clash or complement each other?
I think so. In the States, I would focus more, and it really is a very hyphenated. When I use it in its sort of hyphenated sense, because when I'm talking about the States, I'm really talking about the industrial side of the complex. And that's what we see California have, where it comes together in terms of what I was saying about California, Massachusetts, et cetera, where it's not just about those policies around deregulation, but actually having a complex that part of the reason that, both the military and industrial side of things did well in California was because of its education ecosystem and because of those kind of investments that were made by the state. And then, of course, these venture capital funds being there.
Fantastic. Well, I want to open it up for questions, though I have many more. And I see, yes.
Yeah, thank you for the very comprehensive overview. I have a question about two states that you didn't mention in the comprehensive overview, which are Texas and Nevada, and arguably also Tennessee, but arguably. Those countries have been attracting a lot of industry. Some have even called it a tech sodas out of Silicon Valley to Texas in particular. What do you think that those countries are doing better or differently? Because the new Silicon Valley is not happening due to various infrastructure and network effects that you talked about. But what are those countries doing differently, those states doing differently that does make at least some of the industry move there? Or is it just Oracle and Tesla had moved, so now we are kind of following suit?
Well, I mean, I think that, of course, what Texas is doing is it is offering tax breaks. That matters. I think there's been and there has been the shift to Texas is real, and there's a much longer history of that in terms of kind of states that do offer those tax breaks, but also offer non-unionized labor and have lower labor costs, etc. All of that makes a difference. But at the same time, I think that the center of gravity actually still does remain Silicon Valley. And what's been interesting is I've just come back from a couple of weeks in Silicon Valley, and when you speak to people there about this, hearing about how everybody's leaving for Texas, and then it turns out, well, actually, that's not quite the case, as you yourself sort of pointed to, that a lot of people are coming back to San Francisco as well. In terms of kind of re-engaging with the tech industry and the ecosystem being there, even though at the same time you have these sort of examples of a few states offering something that may or may not work, because that's the other point if one looks at history, that in the 80s when you saw these states spring up, and it's not as if tech didn't go there, they did set up industrial parks, but none of that actually panned out. So it's too early to tell as well.
I think I saw another hand right over there. Yes. I think there's a microphone coming your way.
And just wait until the microphone gets to you so that people in the table can hear you.
Fantastic. And if you don't mind introducing yourself as well.
Thank you for an interesting talk and conversation. I'm Piotr. I'm a Fulbright scholar at Harvard SEAS. My question is twofold. Looking back historically, were there policy decisions made during interstate tech competition that had very significant long-term unintended consequences? What were they? And if you could summarize in what way the governance models created then could be applied today? Are they still adequate or not? And in what way? Yeah, thank you.
I think that was sort of one of my main sort of takeaways from looking at the past is that actually that we did have this tech governance model that was set. Today's tech governance model was set up in the 1980s at the state level and in the 1990s at the federal level. And it very much is a model based on winning, and winning, whether it's a domestic race or an international race. But with that focus on winning, what that means is that there's this huge amount of money that's poured into the tech industry with very little evaluation of the returns beyond the economic growth figures. So the companies themselves, of course, are measuring profit, but there are hardly any measures or monitoring of anything else that the government asks for in return. And that's something that we should start paying more attention to, is that when you do invest in, whether it's in a semiconductor factory or whether, or whatever it might be in terms of the tech sphere, that actually that government think about the power that it does have. And when I've spoken to people in Silicon Valley, even now, some of these guys from, well, someone I spoke to from OpenAI, ex-OpenAI person, said that actually government doesn't realize how much power it has because they're so willing to give away things for free without asking for anything in return. So I think that would be the biggest lesson, that actually just as with every other cent that's spent, which is tracked and monitored, we need to do the same for this industry and not just get caught up in the euphoria of kind of the race and the idea that it must be won at any cost at all.
I'm curious if you, just to say more on that, whether there are metrics that really appeal to you. And so I think of all the strings that were attached to CHIPS Act money and, childcare and education funding, and those were so controversial at the time. And how do you think about, is jobs the metric you want to sort of hook onto, or governance, or?
But I think that's something, so I think, of course, governance, yes, jobs, yes, just that, you could actually look at, because it's become such a huge part of our lives in all these different spheres. There are a lot of socioeconomic indicators one could look at, but that's something I think that we as citizens need to be thinking about a lot more, and to actually come up with the sort of think more clearly about all the different spheres. So whether it's jobs or education or these other impacts that you mentioned, I think all of them actually, because it's clearly it's affected every area of our lives.
Yes.
We are having a mind meld from the online audience, I guess. So multiple independent audience members converging on a question the talk hasn't fully addressed. Given the speaker's argument that the military-industrial complex, government as investor and guaranteed customer, is the real engine, does policy-level regulation matter when capital is this concentrated? And are there models for community-level resistance to tech infrastructure, i.e. data centers? Data centers have come up a lot, that operate outside the legislative framework. So if regulation keeps failing because the capital is just too massive, what does effective resistance actually look like, especially at the community level, like outside of legislators or
You have to invite me back for a whole other talk, is the answer. What does resistance look like? Well, I mean, we're beginning to see some of it in terms of what's happening at the state level. So I kind of just pointed towards it, that some states, I mean, through legislators, but also through community action, are beginning to say that actually, hold on, yes, even if you're going to have data centers, let's look at the impact in terms of our electricity bills, let's look at the impact in terms of jobs, and what it means for all of these different issues around that happen at the local level. So I think you're seeing that, but it needs to be taken case by case. And I suppose one can't really just come up with I don't want to make the mistake of thinking of AI as this homogenous thing, because there's so much going on right now in terms of segmenting the industry when it comes to the semiconductor, the data centers, the different uses of AI. So I think with each one of them, it's about actually having things like citizens' assemblies or pushing local politicians to take up these issues. And we're beginning to see some of that already. Well, and I suppose whilst we're waiting for another question, one of the other things that can be done, of course, is to actually take on this mythology of Silicon Valley itself and this myth that it pushes on how it sort of achieved all of this on the back of sort of a few nerdy guys in garages without any government investment. And we still see that being pushed today. And also the myths around what Silicon Valley actually does deliver.
So thank you so much. We have time for no more questions.
Okay.
So I want to just give you one to leave us with. Which state should we follow? You've sort of encouraged us to pay attention to states. Give us a state.
California.
Fantastic.
Great. Well, thank you, everyone. And this was our last major event of the semester. So extra thank you for coming out, and thank you to our speakers.
Thank you.